rest, and go.
SRO.
SRO, so you have a range clear launch.
And CDR.
Half of the KC processing a launch.
At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily. With operations spanning more than 20 hectares, every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled, every risk is managed, every regulation met, from permits to paychecks, ensuring legal, fair, and quota-compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth
Good evening, investors. Welcome back with me, Dini, on KleverStock, serving you the latest updates for the closing bell this evening. Kicking it off with the evening updates from our local bourse, Bursa Malaysia started the trading week on a muted note, with the main benchmark index ending virtually flat as investors adopted a cautious stance ahead of major second quarter banking results due later this week. At the 4 p.m. market closing, the benchmark FTSE Bursa Malaysia KLCI slipped 0.49 of a point to settle at 1,735.99. Broader market indicators reflected moderate selling pressure across second liners and small cap counters, with the FBM AMAS index dropping 10.21 points to 12,822.07, and the small cap FBM ACE index falling 38.82 points to 5,294.97. Overall market breadth remained weak throughout the session as decliners outpaced advances 718 to 420, while 538 counters traded unchanged. Total market volume stood at 3 billion shares valued at 2.337 billion ringgit. The trading session was characterized by selective stock picking during the ongoing earnings session. Gains in heavyweights like Public Bank, Tenaga Nasional, Sunway Construction helped cushion the benchmark, balancing out profit-taking in technology and healthcare counters such as Malaysian Pacific Industries and KPJ Healthcare. Market participants are turning their focus to upcoming second quarter financial releases from major banking institutions alongside global technology sector cues. Turning to local development, Malaysia's leading refined sugar producer MSM Malaysia Holdings Berhad has returned to profitability in its second quarter ended June 30, 2026, snapping a four-quarter losing streak. The group posted a net profit of 23.43 million ringgit for the second quarter of financial year 2026, reversing a net loss of 29.74 million ringgit recorded in the same period last year. Profitability was supported by lower raw sugar prices, favorable foreign exchange movements, reduced freight costs, and tight operational cost management. Other operating expenses fell 87.4% to 932,000 ringgit, while finance costs decreased 27.3% to 8.16 million ringgit following debt reduction efforts. Top-line revenue for the quarter contracted 25.22% year-on-year to 607.78 million ringgit, impacted by lower average selling prices, reduced sales volume, and a decline in the factory utilization to 39%. For the first half of the financial year 2026, MSM recorded a cumulative net profit of 4.58 million ringgit against a net loss of 26.02 million ringgit in the first half of financial year 2025 on total revenue of 1.16 billion ringgit. No dividend was declared for the quarter under review. Group Chief Executive Officer Dr. Aini Shaha highlighted that MSM prioritized higher margin sales and cost discipline to protect profitability amid persistent import competition. Management continues to engage with the government to establish a sustainable pricing framework that safeguards national food security while supporting the long-term viability of the domestic sugar refining industry. On the balance sheet, MSM reduced its total borrowings to 21.9% year-on-year to 684.36 million ringgit as of June 30, 2026, supported by cash and bank balances of 6.12 million ringgit alongside bank deposits totaling 134.18 million ringgit. Shares of MSM Malaysia settled up 1.5 cent or 2.38% at 64.5 cent, giving the company a market capitalization of 453 million ringgit. Continuing with some economic news, the long-awaited West Ipoh Span Expressway project has officially reached its implementation phase following the successful completion of its 5.55 billion ringgit sukuk financing exercise. Speaking to reporters in Kuala Kangsar today, Perak Menteri Besar Datuk Seri Sarani Mohamad confirmed that the private concessionaire has reached the final stage of securing project funding. With financial close achieved, project teams have now commenced pre-construction operations focused on land acquisition across the alignment. The 60-kilometer expressway is designed as a dual 3-lane carriageway running from Gopeng to Kuala Kangsar. Spanning key corridors including Batu Gajah, Siputeh, Manong, Tronoh, Beko and Seri Iskandar, the new highway will serve as a vital alternative route for long-distance traffic, directly bypassing the heavily congested slope sections across the Menorah Tunnel on the North-South Expressway. Moving on to the corporate front, premier lifestyle property developer Eastern and Oriental Berhad has kicked off its 2027 financial year with robust operational growth across its core property divisions. For the first quarter ended June 30, 2026, the group recorded a 53.4% year-on-year surge in revenue to 281.5 million ringgit, up from 183.5 million ringgit in the previous corresponding period. Profit before tax rose 32.1% year-on-year to 83.7 million ringgit, while profit after tax advanced 29.5% to 64.9 million ringgit. Property development remained the primary earnings driver, expanding 63.2% to 256.4 million ringgit to contribute 91.1% of total group revenue, while the hospitality segment generated 24.7 million ringgit. First quarter property sales more than doubled to 356 million ringgit from 153 million ringgit previously, driven by strong market demand for ongoing developments in Penang and the Klang Valley. Supported by this sales momentum, E&O's unbilled sales expanded 28.4% year-on-year to 1.7 billion ringgit, securing clear earnings visibility for the next few financial years as construction progresses. To expand its township ecosystem, E&O formed a joint venture with Chenggil Medical Berhad and Sky Spring STN BHD to construct a multidisciplinary tertiary private hospital on Penang's Andaman Island. The group also secured a joint venture partnership to acquire a prime freehold site along Jalan Kiapeng in Kuala Lumpur for a luxury high-rise residential project, while preparing a launch of a new waterfront service apartment and landed home project toward the end of financial year 2027. Rounding off today's closing bell with the market update, CGS International Securities has highlighted a widening valuation disparity within the YTL group, noting that a major external infrastructure win could serve as the missing catalyst to narrow the market capitalization gap between parent entity YTL Corporation Berhad and its listed subsidiary YTL Power International Berhad. Over the past 3 years, the valuation structure between the two listed counters has shifted dramatically. Having previously held a higher market valuation than its power unit, YTL Corp now trails YTL Power by more than 18 billion ringgit in market capitalization, despite holding a controlling equity stake in the utility company. According to CGS International, YTL Corp's deep intrinsic value is currently reflected in the negative residual value of 2.9 billion ringgit assigned to its unlisted businesses. While the group has yet to convert its 10 billion to 15 billion ringgit tender book into secured external infrastructure jobs, it remains actively shortlisted for major projects, including the Penang Light Rail Transit Systems contract, the Penang Island to Mainland Rail Bridge package, and selective overseas rail developments. The research house noted that YTL Corp's financial year 2026 core net profit of 1.61 billion ringgit, down 16% year-on-year, came in within full-year expectations. Reiterating its ad recommendation on YTL Corp with an unchanged target price of 3 ringgit and 19 cents per share, CGS International views the current market valuation gap as an attractive entry point to gain exposure to the group's unlisted asset base ahead of prospective order book replenishments. That's a wrap for closing bell updates with me, Dini. Thank you, investors. We shall catch up in the next session. Goodbye.